Hello, hi, it's Mr. Intermarket Analysis again. I'm just going to review the currency pair EUR-USD, try and cover what's happened in the week that's just passed, and hopefully look to forecast what's going to occur in the week ahead. Okay, basically the conclusion prior to this, or basically my own summary so far, is the euro is exceptionally strong, and given obviously all the bearish news flow that's hit the currency, obviously we didn't expect, or the market didn't expect Mr. Draghi to cut obviously the interest rate by 0.25%, which a lot of well-respected analysts out there certainly didn't call for it. Okay, and so given the fact that it's conventional, or it's historical run of always talking the market well in advance, or basically addressing expectations and giving warning signals of a rate cut going forward. Obviously he's following Mr. Ben Bernanke's shock and awe policy, and he certainly has shaken things up in the fundamental world from my perspective. Okay, so every central bank is now on the path of a currency war. Everybody wants to debauch their currency and destroy it, with the hope of reviving exports and obviously reviving their economies as well. You've got the RBA talking down their currency. You've got the ECB now talking down the currency. You've got the Japanese talking down the currency. You've got the Yanks now who'd love to talk down their currency, but given the concerns that they've had with regards to the debt ceiling, and obviously that's well, to be honest with you, the debt ceiling has actually helped them, because that brings in downgrades and rating cuts. And obviously that in itself debauches the currency and destroys it. Okay, so but given the fact that their economic data recently has started to pick up, especially with the NFP data better than expected on Friday, obviously that caused the dollar to rally, and the currency euro took another hit. But having said that, overall the rate cut is now all factored in, and I do expect the euro to rise going in the week ahead. Okay, that's my conclusion, and I'll explain the reasons why technically as well. From a fundamental perspective, the main fundamental reason why the euro has been quite resilient even after a rate cut, okay, given the fact that it retraced almost 50% of the actual rate cut itself to a certain extent before the NFP data on Friday, is because of the fund flows that are going into Europe. You've got the Chinese now diversifying obviously their portfolio, given the fact that Mr. America is on the verge of obviously a default. They can't really guarantee their debt will be safe, given the fact that they're Chinese buy a hell of a lot of US debt. Okay, so I think they've sort of had enough, and given the fact that they kick the can down the road, and we are going to revisit the whole debt ceiling scenario again in January, February, I think the Chinese are definitely trying to diversify into the euro. Okay, so obviously they've always helped the Europeans, especially in the last 2 or 3 or 4 years. And they've come to the aid of the Europeans in terms of buying their bonds and upholding their economy. And recently they've started to buy the equity market as well. Hence the reason why the euro has been quite resilient, hitting the 1.4 level, and the European equities have been resilient as well. Okay, and that's generally what's happening now. That's certainly a good, powerful argument on the back of a European equity market rally, and for it to sustain itself higher as well, given the fact that we did have a powerful reversal on Friday, much more powerful than I expected. Don't get me wrong, I rode the rally from 6660 region up to the 6680 region and the 6690 region, and then I actually reversed my position and went short on the FTSE at around the 6685 region, 6690 region, and I was subsequently stopped out around the 6731 area, which was my stop loss. So although I had success on the upside, I also obviously I had failure on the downside as well in terms of shorting the market. So they are quite tricky markets at the moment. I did finish with 110 points in the week last week. I still have a short position on the CAC given the French downgrade, and I also have a short Nasdaq position as well given around the 3360 region, and I expect that to come back in on Monday, and for it to certainly pull back. Okay, now with regards to the EUR-USD again, again the whole highlight of the whole week was two very real features for the EUR-USD. Obviously we had the rate cut, which not many people expected, so hence the reason why the currency was clobbered. Okay, and then we had the NFP data, which was better than expected. Again, the currency got hammered. Now I did have a nice short position on that, on the 1.3420 region or 3415 region, and we certainly had a nice 60-point drop on that. So that was a nice quick 60 pips post NFP. So that was certainly enjoyable. Okay, so let's see what's happening here now. Okay, so you have a weekly chart. We've obviously held that resistance zone, which I've already explained. We've held the upper level, which is a purple trend line. To be honest with you, I didn't really touch it, but we're certainly within that bullish channel. We've certainly broken out of the bullish channel, one can argue. Now, the key support will be always on the weekly. Will be, obviously, as technical analysts, we always state that previous resistance equals support. So this level here, which is around the 1.3350, call it 3350, down to the 200 MA. So anywhere around the 1.3350 to the 1.3340 level, around that region, I'd say anywhere between 1.3350 down to 1.3320 or even 1.33. Make it a 50 pip, obviously zone. Okay, given the fact that we can always have wicks, etc., etc. And we have this gap that was closed, which the gap is 1.33 to just confirm this 1.31, well 1.33. Okay, so 1.34.35 and 1.33. Okay, so 1.335, 1.33 is certainly the zone to watch. Okay, if we break that on a weekly, well anyway, intraday on next week, then we certainly are opening up the next level, which is around the 1.31 level, which coincides with the H&S formation, which I'll explain later on. Okay, now let's look at the daily chart. What does the daily chart tell us? Okay, so the daily chart, obviously we have this uptrend here, which we've broken. Now we no longer utilize that. We have to discard it as traders. Okay, we had previous resistance equals support, which we failed. We discard that. Okay, all we have on the daily chart really is your H&S formation, which is projecting a target of around the 1.305 level, which is 200 MA is around the 1.32, and then obviously you've got 1.31, which is this horizontal support zone here. Okay, so now from my perspective, obviously we've closed the gap and we held the gap on the wick. Okay, so from my perspective, given the fact that there's no other deflationary economic data that comes out that's signaling deflation, no other economic data that signals any European crisis or European growth slowing down, etc., etc. Given the fact that we no longer have the strong US economic data that obviously indicates more tapering, or we don't have any geopolitical crisis or socio-economic crisis, then the euro will certainly hold that level around the 1.33, and we should certainly project higher and look to touch the 1.3450 level, which is a neckline. If we do breach that, then obviously we have a short squeeze and move much higher. Okay, so always keep an eye on those zones. Okay, so 1.33 level is absolutely critical. If that goes, then yep, definitely opens up the 200 MA around the 1.32 level. Okay, given the fact that we did have strong NFP data on Friday, still the euro was resilient and held, so that must be respected. Okay, remember that. Okay, now let's look at a 4-hour chart. 4-hour chart obviously has a H&S formation, which is a target of 1.31, which is again more or less similar to the daily chart. Okay, keep an eye on that level again, like I stated, 1.3470, 1.3340, anywhere around that zone where previous support equals resistance, and we can certainly come into that. Bear in mind though, we have two bottoming tails here, which are quite powerful, so that definitely signals support in the interim. Okay, on the 4-hour chart. 60-minute chart. Okay, 60-minute chart, we have some a symmetrical wedge forming here. Again, we have two bottoming tails in the 60-minute. Definitely looking for it to move higher. Okay, the most interesting part here we have is on the 10-minute chart, which has an inverted head and shoulders after we've had a double bottom. Okay, inverted head and shoulders target is giving you a projection around the 1.3440 level, which again is the horizontal resistance above. Okay, so going into next week, what do I expect? I expect 1.3440 level to be tagged. Okay, that's what I'll be certainly looking to trade towards. Although you will get some turbulence around the 1.34 level, obviously psychological, etc., etc. And obviously you got the 200 MA there as well. So I'd certainly expect 1.344 to be tagged next week. That's my call, and that's what I'll be looking to trade as well on the long side. Especially given the fact that the NFP data failed to create a new low on the euro currency, so that clearly shows you that the Chinese are certainly willing to buy this currency anywhere below. And certainly want to push it higher, given the money flow and the funds flow that's going into the eurozone, and want to play the recovery there. Okay, So I'll leave it at that, folks. Actually, one more thing. What I'll do, I'll share the US dollar chart. This will be quite interesting, given the fact that we also have a gap fill play here. Okay. Now, bear in mind, you have a HNS on the euro. Obviously, that means that you have an inverted head and shoulders on the US dollar chart. Now, although the inverted head and shoulders has played out so far, and we've held the neckline. Okay, so this is your neckline here. Let me just do a little dotted line so you can differentiate. Okay, so inverted head and shoulders pattern. So this pattern is signals 79 region, neckline to around the 81 region. So this is signaling around the 83 region. Okay, so a $2 move higher or 2.2 move higher here would be definitely around this region here. Okay, so which is around the double top, and resistance around here as well. So certainly look at the turbulence at 82.15 first of all, and obviously next level will be 83. Now what's interesting as well is that the equity markets have started to rally with a drop in the euro. So watch out for that relationship. Any drop in the euro will equal a stock market rally in Europe. Any rally in the euro, okay, will equal a stock market drop in Europe. So given the fact that I'm projecting 1.344 on the euro first of all, then definitely expect an equity market drop based on intermarket analysis going into the week forward. Okay, so always remember, risk on, risk off, wax on, wax off. Goodbye now.